Welcome to OGE's Form 450 Confidential Financial Disclosure Filing Tutorial for Annual Filers. If you're a new entrant filer, some of your reporting requirements will differ. In that case, please consult the instructions on the form. Today we are going to review why you've been asked to file an OGE Form 450, and then we'll walk you through the form part by part to discuss and define the information you are required to provide. Why am I being asked to file an OGE Form 450? Your agency has decided that your job involves duties and responsibilities that make a conflict of interest or other ethics concerns more likely to arise. By having you fill out an OGE Form 450, they can give you advice about potential conflicts that may exist between your duties and any personal financial interest you, your spouse, or dependent children may have. What does a conflict of interest look like? Essentially, a conflict of interest is an overlap of government responsibilities and any personal holdings, outside income, or other interests that may conflict or influence your decisions or affect your ability to be impartial. Let's say you're asked to serve on a source selection where your spouse's employer is a bidder. This would be considered a financial conflict of interest. If you worked on the contract, it could derail the procurement, subject you to discipline, or in some cases, cause you to incur criminal penalties. Why avoid conflicts? Working on a government matter when you have a conflict of interest or the appearance of a conflict can have criminal and non-criminal penalties. By submitting the OGE Form 450, your agency can help you avoid conflicts. Is there a filing deadline? Yes, the deadline for filing is February 15th. What is the reporting period for the annual report? The reporting period for your annual report covers the preceding calendar year. This means the information for the reporting period is January 1st through December 31st. The following slides show examples of the types of information you may need to report. Since you are an annual filer, you may already have most of the required financial information in your last year's report. Keeping an electronic copy of your annual report ensures you remember to report items you still hold in addition to anything new you may have acquired over the reporting period. What do I have to report? The OGE Form 450 consists of a cover sheet and 5 parts. Part 1, Assets and Income. Part 2, Liabilities. Part 3, Outside Positions. Part 4, Arrangements or Agreements. And Part 5, Gifts and Travel Reimbursements. The cover sheet. There are 3 sections to the cover sheet: background and contact information, reporting statements, and your signature. Cover sheet contact information. What is the purpose of the cover sheet? The cover sheet has 3 important purposes. First, it's where you will provide background and contact information for your agency ethics official to identify you, your filing status, and how to contact you with questions. Second, it includes reporting statements that allow you to indicate if you have any reportable items. If you don't, you can simply check the no boxes, and the cover sheet becomes your whole report. If you answer yes, you must report those items in the appropriate parts of the form. But before you check any boxes, you should read the instructions to make sure what you check is accurate. We will go over the instructions in more detail on the following slides. Finally, do not forget to sign and date the report before submitting it. Your signature certifies that the statements you made are true, complete, and correct to the best of your knowledge. Part 1, Assets and Income. Each part of the form comes with its own set of instructions. The instructions will help you determine how to answer the reportable statements on the cover sheet. Here we have instructions for Part 1. As you can see, the instructions provide you with examples of what is and is not reportable, for whom you need to report, and important definitions to assist you when filling out each part. Part 1 of the form is where you record your assets and income. What do I report? As an annual filer, you must disclose assets and income worth more than $1,000 that you or your spouse or dependent children earned during the reporting period. Remember, the reporting period for an annual filer is the preceding calendar year. What kinds of assets and earned income are reportable? Let's start with earned income because it's pretty straightforward. For earned income, you only disclose the source of any earned income of more than $1,000 that you, your spouse, or your dependent children earned during the reporting period. Earned income for both you, your spouse, and your dependent children, if applicable, includes things like salary, fees, commissions, and honoraria from sources other than the U.S. government. If you and your spouse are current federal employees, you do not have to report that income. Now let's turn to reportable assets. Assets are anything held for investment or the production of income with a value greater than $1,000 at the end of the reporting period, or assets with an income of more than $1,000 received during the reporting period. The types of assets most commonly reported are fixed or variable annuities, IRAs, 401ks, and stocks. Part 1 common mistakes are not reporting your spouse's holdings or income, forgetting to report the specific names of the stocks, bonds, and sector funds you may have in an IRA or 401k account. Other common Part 1 mistakes are reporting salaries or retirement benefits from U.S. government, reporting thrift savings plans, reporting income from Social Security, veterans benefits, and other similar U.S. government benefits. Other non-reportable assets are diversified mutual funds, certificates of deposit, savings or checking accounts. Part 2, liabilities. Liabilities are money owed to the filer's spouse, or the filer's dependent children, owed to a creditor that exceeds $10,000 at any point during the preceding calendar year. A reportable liability would be money owed to an individual, such as a personal loan from a friend. Non-reportable liabilities are loans from financial institutions or business entities, provided these loans are subject to the terms available to the general public. Examples are the mortgage on your personal residence, student loans, credit card accounts, and money owed to your spouse, parent, siblings, or children. Part 3, outside positions. Report these only for yourself. You must report positions held with organizations other than the U.S. government at any time during the preceding calendar year, even if you were not compensated for them. Examples of compensated outside positions include part-time teaching, being a partner in or owner of a business, serving as a paid consultant. A few examples of a non-compensated position are providing services to a nonprofit or volunteer organization, serving as a board member of a professional association. You don't have to report the following positions: anything held by your spouse or dependent children, anything held as a part of your official duties, or positions with religious, social, fraternal, or political entities. Part 4, agreements and arrangements. You must report any agreement or arrangement in which you participated during the reporting period. Reportable agreements and arrangements are typically prior employment-related payments and plans, like pension and retirement benefits, or future employment agreements both for moonlighting jobs or post-government service. Report for yourself only. Some examples of reportable agreements and arrangements are continued participation in an employee pension or benefit plan of a current or former employer, a leave of absence, Continuation of payment by an outside source from a current or former employer. This includes severance payments. You should also report any agreements and arrangements that you hold concurrently with your government position or employment that will terminate your government service. You do not have to report future employment if you are going to another federal entity. You also do not have to report continued participation in a defined contribution plan, such as a 401k, if you no longer make contributions to the plan. You do not have to report agreements or arrangements related to your government employment or spouse or dependent children arrangements or agreements. Part 5. Gifts and travel reimbursements. Annual filers must report gifts and travel reimbursements received from a single source aggregating more than $415 during the reporting period. Filers count only items worth more than $166 when determining whether gifts or travel reimbursements from a single source totaled more than $415. These totals are updated frequently. Check the instructions on the form each time you fill it out to ensure your totals are correct. Examples of reportable gifts and travel reimbursements are travel, subsistence, and related expenses to attend conferences, seminars, and speaking engagements that take place away from your official duty station but relate to your official duties. Widely attended gatherings of mutual interest to a number of parties when your attendance will further agency programs or operations. Training in a non-government facility or meeting, tickets to a sporting or entertainment event, you do not have to report gifts in the nature of communications to the filer's office. These are things such as subscriptions to newspapers or periodicals. You also do not have to report suitable mementos of a function honoring the filer. An example of this would be a retirement party. Aggregating gifts from a single source. On this slide, we have an example of a gift of tickets that the filer received. The filer received 3 tickets to see a play, 2 adult admission tickets with a market value of $225 each, and 1 child's admission valued at $125. So we'll put this in 3 steps so that you can determine which of these gifts that you should report. In step 1, eliminate gifts with a value of $166 or less. So you have 1 adult ticket at $225, another adult ticket at $225, and the children's ticket valued at $125. Since the child's ticket was only worth $125, you don't have to report that one. So in step 2, we added the $225 plus the $225 for a total of $450. This is over $415, so you would need to report the 2 tickets. So in step 3, you just report the 2 adult tickets, but not the child's ticket. When you have completed the form, don't forget to sign, date, certify, and submit it to your ethics official. Don't hesitate to ask your agency ethics official if you have questions about how to fill out this form. Thank you.